But topping our program today, grain prices are at all-time highs right now. And if you're a farmer, well, who could complain about that, right? Well, farmers, small grain traders, and country grain elevators are feeling the pinch of these volatile grain markets. Can the price of wheat really be above $10 a bushel, or is the price being artificially inflated by factors beyond the farm gate? We decided to find out. When commodity traders at the Chicago Board of Trade get this worked up, it can only mean one thing. Prices are high and they're going higher. So how do you juxtapose that old stock market adage of buy low, sell high when the low price is as high as it's ever been?
I think the economy has had a whole lot to do with this.
That's the question Ray Guidry's been asking himself these days. Guidry, who manages the Point Capee Farmers Grain Elevator in Bachelor, Louisiana, says higher grain prices right now have nothing to do with real market factors. Instead, it's market speculators who are pumping billions into the commodity markets with little regard for who actually has to produce and deliver a crop come harvest.
We're in a position right now where we've had to take most of our future contracts and try and move them off of the market to alleviate the margin calls on them, but it also puts you in a position where you've taken your futures and given them to the majors, so now you're at risk and at what they're going to do you with the basis.
Those majors, as Guidry put it, are large grain buyers like Cargill, and such a market move by Guidry's elevator is likely to impact the basis price farmers will receive for their crop come harvest. Simply put, basis is defined as the cash price minus the futures price, but basis can be both positive or negative depending on the factors that determine it.
These tremendously high prices are not going to be appreciated by everyone, you know.
Basis is usually a factor of what Guidry calls real-world trading prices for grain, not the double-digit numbers we've seen lately. Farmers who may have booked a futures price for soybeans, for example, at say $7 or $8 a bushel, aren't likely to be paid that price when they deliver their soybeans to their local elevators this fall.
Guys with a say a $7, $8 contract, you know, he's only looking at $6.50 so for beans, you know. I mean, the board looks good at $13, but most people have already contracted.
You'd never hear a farmer complain about $8 a bushel soybeans, but with beans trading at more than $12 a bushel right now, any farmer who booked at $8 left $4 on the table. Farmers say what's going on in the commodity markets right now is kind of like a high-stakes game of musical chairs. But when this music stops, if you don't have a chair, not only will you be out of the game, you may be out of business.
The Board of Trade was a tool for farmers to trade their grain, and it's not that anymore. So.
Greg Fox is a grain marketing specialist who says right now grain futures prices are extremely high. But as long as speculators stay in the commodities market, it's farmers who could be hurt by the numbers currently ticking by on the Board of Trade.
Unfortunately, some of them booked at $8, $9 soybeans, which was good numbers at the time. Nobody anticipated these runs in the market. So when they go to sell it at harvest time, if the basis what the elevators are offering doesn't improve a good bit, they could look at $7, $6 soybeans.
Greg Fox says no matter what price farmers may have booked their grain crops for, that price, no matter how high, is likely to be tempered by increased input costs for things like seed, fertilizer, and fuel. Diesel prices right now are running about 40 cents a gallon higher than they were this time last year.